Welcome back, dear learners. Before the ad break, we introduced the statement of comprehensive income. And what we see here is an extract pre-adjustment trial balance of Limpopo traders at the end of their financial period, which ends on the 28th of February. And then we have the balance sheet account section, as well as the nominal accounts section. Here are the adjustments that we will need to do as we prepare our statement of comprehensive income. We will do adjustment number 1, which is a calculation for depreciation. We'll also do adjustment number 2, which is to do with repairs. Then we have bad debts, adjustment number 4, adjustment number 5 also has to be done. Okay, so let's start with the depreciation adjustment. It reads, provide for depreciation on equipment at 10% per annum on cost and vehicles on the diminishing balance method at 20%. It is very important at this point that you already know how to calculate depreciation. There are 2 methods of calculating depreciation. We can calculate depreciation on cost. With this method, we simply say cost times the rate times the time. That is with the cost price method. Then the next method is the diminishing balance method. I'm going to write it down here. With the diminishing balance method, we will now take the carrying value. So with the diminishing balance method, it is the carrying value times the rate times the time. So the difference is with the cost price method, we use the cost. But with the diminishing balance method, we use the carrying value. Now we need to calculate depreciation so that we can show it in our statement of comprehensive income. All right, so in calculating depreciation, this is what we are going to do now. You have to start with the first one that we're given. The first one that we're given is the equipment. All right, so I'll take my equipment, which is 10% on cost. I have to come here, and my equipment is 196,000. So I'll come here, and I'll say my equipment is 196,000. So I'll bring 196,000 here, 196,000. Then I'll multiply it. Remember, that is the cost. I'll multiply it by the rate, which is 10 over 100, multiplied by the time. In this case, it is 12 over 12. Grab your calculator. Remember, you are saying 196,000 multiplied by 10 over 100, multiplied by 12 over 12. How much do you then get? You get 19,600. 19,600. That becomes your depreciation. 19,600. This is depreciation for our equipment, but we also need to calculate depreciation for our vehicles. All right? With our vehicles, we are told that the cost price of the vehicles is 360,000, but we don't calculate on the cost using the diminishing balance method. Remember, we need to have what is known as the carrying value. How then do we get carrying value? We say cost, which is your 360,000 cost, minus accumulated depreciation on the vehicles. That is your 72,000. So I come here and I say minus 72,000. That will give me carrying value. And your carrying value becomes 288,000. 288,000. Then I now have my carrying value, which is 288,000. Then I say multiply this now by the depreciation rate, which I'm given here, 20 over 100, multiply by 12 over 12 months. That would then give me my depreciation amount, which is 57,600. So I have 2 depreciation amounts. The first one is for my equipment, and the next one is for my vehicles. When I have these amounts, then I can show them now on my statement of comprehensive income under operating expenses. So the first one that I have is for my equipment. And my equipment is 19,600, which is this one. And the next one is on my vehicles, 57,600. There we go. And when I add the two, I have 77,200. It is important that when you calculate this amount, you put the depreciation amounts for all your assets into one bracket. Remember, this is for your equipment, and this is for your vehicles, and it gives you the total, 77,200. Once you have this, then you know you have your depreciation amount, which goes into your operating expenses. Okay, let's look at adjustment number 2. Adjustment number 2 then reads, repairs to the building of 36,000. So we did some repairs to the building of 36,000 have been debited to the land and the buildings account in error. It is very important that we understand that when we have land and buildings will only increase when we add new land and buildings or when we make an extension to the land and buildings. But repairs to land and buildings will not add to the cost price of the land and buildings. Repairs are therefore an expense. Repairs are an expense. And land and buildings are an asset. So we must not debit repairs to the land and buildings because repairs are an expense. They must go to an expense account. And land and buildings must only be affected by what increases our land and buildings, which is an asset account. Okay? So what happened here of debiting 36,000 to the land and buildings account is incorrect. So it simply means if I am to get the real value of my land and buildings, here I have 656,600. This amount is incorrect because we have debited. When we debit an asset account, we are increasing. When we debit an asset account, we're increasing. So we increased the land and buildings by 36,000, which was supposed to be recorded in the repairs account. So to correct that, therefore, we come here and we say minus 36,000. We minus 36,000. Therefore, the correct amount for land and buildings will be 620,000. 620,000. Now, what do we do in the statement of comprehensive income? When we come to our repairs, we have repairs in the list of balances, 7,500. And then the 36,000, we add it now as part of our repairs. So we come here and we add the 36,000. It is not supposed to be debited to the land and buildings because it is an expense. And our expenses are shown in the statement of comprehensive income and our operating expenses. And that is what we should have done, not to debit it to the land and buildings. Land and buildings is an asset account and repairs are an expense. Therefore, they must not be in one account. So, to remind you again, we came to our land and buildings, we subtracted 36,000, then we remained with 620. That is the correct amount for our land and buildings. And when we come to repairs, we have 7.5 in the list of balances, and then we add these repairs that were incorrectly recorded to the land and buildings. Then we record them. Then we end up with 43,500. Dear learners, let's go for an ad break, and I'll see you shortly.